So I want to welcome you once again to this session. Thank you so much for coming through. We'll have uh, okay. So most welcome once again. Thank you so much for coming through to this session. Today we want to have a conversation on how money intersects with our professional life. And myself and Nasim will take you through this conversation. Nasim is trying to connect, and once she's here, I'll invite her through. But for now, I want us to engage into this conversation in terms of how we think about money. So our topic today, the financial weight of your career. And we want basically to look at the money side of our careers. So it's quite important for us to appreciate that for most people, they join career for money. And as they join career for money, there's a lot that is happening. Either they are meeting or they're achieving whatever they really looked toward to, or it's a different scenario. So it all starts from that point in time when you are in the interview panel and somebody is asking you, how much can we pay you? And then you have a lot that comes to your mind to understand, is this my value? Am I overshooting myself? Am I asking for much? And then it cascades down to signing that contract where you know that I'm signing this contract and now this is what I'm going to be paid at the end of the day. Now, for quite a lot of people, sometimes the amount makes you feel, I don't know what feeling, mesmerized. I don't know what kind of feeling I can say, but every time you're signing a new contract, and myself inclusive, there's excitement. Most probably because you've not been earning that amount of money. And yeah, you look at the money and you see a lot of change that is going to happen. But something that's very, very interesting is that after 2-3 months, that story starts to change. You start to see not much difference compared to whatever was happening previously. And then you're asking yourself, am I making sense? Is it the right thing to do? All that starts to come into your brain, asking yourself. But at the end of the day, I want to say that from my experience, I think money itself is an emotion. There's a spirit around the aspect of money. Somehow, money controls how we feel. And that is why it's quite important for you to manage your money such that even that feeling that comes with money controlling you, you're actually in charge. So when you receive that contract and now you're going to start earning that amount of money, you need now to start asking yourself, yes, I'm paid this amount of money, but what am I actually spending to be able to make this money? Now, for business owners, it's very easy for them to be able to look at some of these aspects, for them to evaluate, these are my expenses, this is my income. But for us employees, quite often, we do not get into even to appreciate how much are we spending to actually earn this amount of money. Yet it's very, very important. And that is why you see that somebody will be given a contract, let's say, of maybe of 2 million, and maybe they are now trying to think of exorbitant expenses or ways of how to spend that money, forgetting about the fact that, yes, this money is coming through, but the question should be, is this money just for now, or this is money that is actually going to sustain you for a longer period of time? And that is what I want us to just reflect about. So in the comment section, either you're watching this on YouTube or you're watching this via Zoom, what is that one thing that you learned about money when you joined employment? Maybe you may not have learned it during your time as a child. For quite a lot of people, these are conversations that you do not have. Whatever you mostly hear is go study hard, find a job, but the money aspect sometimes, most times, is not really discussed. So what are some of those? It could be a good thing that you might have realized about money, but it could also be something that you actually thought about differently. So I would love to get your thoughts in the comment section. For me, as you try to reflect, I just want to share mine and say that for me, I thought that when I was earning, my first salary was around, I think was around 300. When I was earning that amount of money, my first salary, I thought that if at all I have a chance to earn 1 million or 2 million, like my life would be totally changed. Like I would not need more. And surprisingly, as life would do it, that man actually came through not so long ago. But it was interesting that I came to learn that salary is no longer enough. Like it's not something that you can say that this is enough for me. Like I'm earning now well, so it can cater for everything. I don't need to seek for more. I think one of my lessons is the more you're earning, the more you want to earn more. So there's that desire to keep asking for more, and more and more. So that's one thing that I think I've been able to learn about money. So I would love to know, what is that yours? What is that one thing that you learn about money? Okay, I see different introductions coming through. So I want you to just share, what is that one lesson that you've learned about money in your career? For me, like I've mentioned, it was about thinking that if I'm earning a given amount of money, like everything will be made up. Like it would be the end in its own. And again, the other lesson that I also learned is that if you are employed, the amount of money that they are paying you is not just, they're not just paying you for your qualifications, but they're paying you for the value that you bring in. So over time, I've come to now get into the shoes of the person who is actually employing me, to reflect deeply, to ask myself, whatever I'm being paid, am I actually bringing that equivalent? This is a very big question that you need to ask yourself. Are you bringing in value that matches or exceeds? Definitely, they're paying you that money or salary because they expect that you bring in something that is more, because they have to make a profit from your being in the organization. So asking yourself, am I bringing in more value? Because it is that more value that is actually going to make you even negotiate for more value. So that is something that I also got to learn about money. What is that one lesson? Let me see in the chat box to see if there's anything that has been noted. Please feel free to share if you're watching this via YouTube, feel free to share. What is that one thing that you've learned about money that no one told you about? Okay. Anything in the chat box? I want to see what is that. Please feel free to type something in the chat box. Let's share. We want to have this very interactive, such that we can learn. It could be a challenge. It could be a good lesson. What is that? Okay. All right. There's a message here. Okay. Okay, okay. Sorry, I'd not seen the messages. Right here, there's one lesson here from Charles says my lessons about money is never accumulate, it never accumulates. I postponed going back to school, waiting it to accumulate, yet it never accumulated. Yes, I think that is something that is I think for quite a lot of people. Even when it comes to saving and investments, mostly people are saying maybe when I earn more, like I told you I was earning 300,000, I was like, if I start earning 1 million or 2 million, maybe that will actually come help me to be able to achieve some of the savings goals or investment goals. Vanessa says getting employed is not a long-term source. Look for alternative sources of sources or services. Again, this is also very powerful. Thank you so much, Vanessa, sharing. Why? Because I think, and I keep on saying this, that I don't know why our parents did not tell us this, that all our teachers did not tell us that if you're going to earn a salary, like it's not the end in itself. Because the mindset that we entered employment with was, if you're earning a salary, that's enough. That's okay. You don't need even to be looking for money outside. But you get realized as you move through the journey that you need. Sharon says her first salary was similar, around 350, but I knew for sure that on the onus was entirely to me to ensure that I grow financially. I think that is a very great lesson. And 8 years down the road, I get I guide me salary or funds on where to what to do. And I think this is she's trying to share about the aspect of budgeting. So for quite a lot of things, we learn them as we on the go. Some of the things we are not sure of what to do. You know, you get this money and even start asking yourself, what can I do with the money? Sometimes it's a lot, especially when you're starting out, you do not have responsibilities. But it's also sometimes it sounds to be a lot before you can actually find problems. Not even problems, but before you can actually plan where the money will go. It's very interesting that you have, let's say, 1 million shilling on your account. But when you start to do like a budget, you even realize that, this money is not actually enough for me. Like I cannot pay all that I need to pay with this money. And then you're now trying to look at the future as well. I think the other thing that I've also continuously learned about money, and again, we can have more lessons coming through, but what I have learned about money is it's important for you not to go in debt early. Now, I'll give you an example. So there's a colleague I worked with in one of the organizations. So this organization, because it was an international organization, we had this opportunity that banks could come through and give us loans. So this one person, the bank came through. These people are really come with exciting offers. Be like, we shall give you this. Maybe you're earning 2 million, and somebody will tell you, we shall give you 40 million, and you'll be paying this amount of money for 5 years. It's exciting because you know you're earning 2 million, and somebody's giving you 40 million. Like you now start to think about land, building, and all that. Now, for quite a lot of people, in all that excitement, they forget about the entire aspect that at the end of the day, if I'm to take a loan and this money is going to be deducted off my salary, how much is actually going to remain for me as an individual, such that I can sustain myself? Because you see the house, the trees you've planted, or the land that you've bought, it's not liquid, it's not bringing in any money. And yet you need to keep yourself on ongoing basis. You need money that can facilitate other financial needs that you might have. So before you can take that or get into the excitement, ask yourself, why am I taking the debt? Am I just taking it because there's an opportunity? Or am I taking it because I have that, what can I say? I have actually planned for me to take that debt. you already have where you're going to put the money. And then also in the same way, you're not just taking this amount of money to just put it into something that may not be productive. I usually encourage people that if you're taking a loan, let it be maybe for something that is going to be productive, such that the interest that you're going to pay on another loan, on the loan, is able to be matched by some of the returns that are going to come from your activity that you might be running. So that is something that you also appreciate as you move forward. So I was reading Nasim, who will be speaking to us later on. She wrote a book which is called Money Conversations. And in that book, she shares quite a lot of aspects. Some of those aspects that she shares, and again, she'll be sharing us more about the book, but you would also see how you can tap into the book. So she says, the salary talk you must have before signing a contract. So one of the things that, again, for employees is once you're earning an amount of money, your mind is fixed on that amount of money that you're earning. You get yourself into more like a ceiling of that amount of money that you even hardly think of how can this money grow, or how can I use this salary as a seed to be able to create something else. But also even asking this question before you sign the contract, how often does this salary grow? Because you're putting yourself into signing a contract. Maybe you're leaving another workplace into another workplace, and you've not yet gotten into the details to ask yourself, this salary that I'm going to be paid, how often does it grow? And depending on the time that is required, I'll give you an example. There's an organization I was working for. Again, there was a gentleman who was leaving a workplace that was a bit flexible for them. They were working up until, I think, around Wednesday, because the company was international and they had less activities. So this person could also do other things outside his job. And now he enters this organization where we work like from Monday to, let's say, Saturday. And this person, yes, was excited by an increment of, let's say, 100,000. But at the end of the day, they come to realize that, oh, wait a moment, I've actually signed this contract, and this amount of money, there's an opportunity cost that I've actually paid, because I'm now no longer going to be able to do all these things of lecturing and running around either my farm or all this, because now it is capped. Like I said, salary is going to be paid to you because of what you're bringing on the table. And if at all they are paying you per time, of course, most of us employees are being paid based on our time input. And sometimes the employer will say it will be 8 hours, but you find yourself that you're actually even offering more. So that question is quite important for you to be able to put yourself. It's a question you need to put forward before you actually get into the contract. Now, one of the other things that also is shared is the aspect that your lifestyle. Quite a lot of people, when they get into employment or when they get certain kind of jobs, the first thing that comes to their mind is change a car or buy a car if they do not have a car. The other conversation that might come through, maybe they want to change their wardrobe. All these things I think are very, very good, because in one or the other, you want to look the part. But I think it's also very quite important, even if it's a salary increment at work, for you to evaluate and see, for this increment that I'm actually getting, am I just looking at it spending, let's say, on an additional expense, or I can actually get this amount of money and put it, let's say, in a circle or put it in a unit trust. Recently, I shared how I was able to save over 12 million for over 5 years, saving just 200,000 every month. And what that meant is that that amount of money, the 200,000, seemed so small, but at the end of the day, it had a very big ripple effect that after all that period, it could give me. Now, if I had taken that 200,000 and maybe I was putting it on fuel, maybe immediately, maybe that will actually be an expense that I would never even think about, because when money is gone, definitely it is gone. So that is one of the things that I want to say. Now, there's one thing that I think it is Sharon who has shared about budgeting, being able to tell where your money to go instead of wondering where your money went. Now, when it comes to budgeting, there's one thing that I've also come to appreciate. For certain people, they tell you that, okay, you need to have a budgeting app, one that tracks your expenses. But I'll tell you honestly, I've struggled with applications on the phones. I've end up downloading them but not utilizing them. So one of the things that has really worked for me is now, like for us who use laptops. So I have an Excel where every time, let's say a month ends, I go down there to try to see what are some of my expenses, or what do I plan in this month to spend on. Then I look at how much is my income coming through. Then I'm able to balance it to see, okay, for this month, I'll not do A, B, C, D. I'll only do a portion of it, and I can do this in the next month. So what that helps me is that even before the money comes through, I already have a way of how I've directed this money. Like money will come through, and within a very short time, I've been able to distribute before other problems come in. And I think that is, I think I was watching a video yesterday, and this was somebody in UAE, one of the Ugandan girls was saying that for you, you're in Uganda, you're earning 300,000, and you're able to save even maybe 20,000 a month. This side, I'm earning 2 million, but I cannot even save 10,000 of this money. I don't know what spirit is that every time my money grows, even the problems grow. That when I was in Uganda and I was earning 300,000, my problems were so small. But now when I went this side, the problems are of 1 million, of 2 million. So I don't know, from your perspective as somebody who is watching this or who has gone through the same experience, what do you think it could be the reason for that? Like, why do you think that every time our expenses, like our incomes grow, like today you're earning 100,000, okay, maybe you're earning 1 million, and now the next time you're earning 2 million, and you cannot even save maybe 50,000. And I'll give you an example, and I want somebody also to share. For me, because I'm an accountant, so I'm privy to certain kind of information within an organization. So there are people who are earning certain amounts of money. I'll give you an example. I was an accountant in one of the organizations where somebody was earning like over 19 million, like 19 million. But you get to realize that this person, by around 16, 17, they're asking you, when are you paying us salary? So this is a high paid person whom you think, for you, when you sit down and be like, if I was being paid like 3 million was hitting my account, I would definitely save 20% of that money. Not even 20%, 30%. I can actually save like 900,000 of that money. But then when you get to actually receive that amount of money, saving that 30% becomes a problem in itself. What do you think would be the reason? Why are people not able to save highly when it comes to them earning well? And again, even people who are earning little, I'll tell you that there's somebody who is earning, let's say, 500,000, but they're able to save 100,000. But somebody is earning 1 million and they're not even able to save. They're actually even in debt. So that is something that I think I keep on asking myself, what happens? Anyone wants to share? What do we think could be the problem? You can actually put up your hand and I'm able to allow you to just share for those that, okay, Vanessa says peer pressure of society. That is that's a good response. Anyone else? Where do you think the problem is? Okay, Philip says beginning from third year and the fourth year, I also joined the saving groups. And in the mid year, okay, in the mid year, I borrowed money from the group to buy second land. And by the end of the cycle, I was in position to buy again land and a motorcycle that I felt I have money and I can do. If I continue on a long-term investment rather than having money in the pocket, which you can spend at a time. Okay. Charity says comparison. Thank you so much, Philip, for sharing that. One of the other things that I want to say that again, this was a lesson for me. It is hard to save after you've spent. I don't know if some of you have experienced this as well, but you get realized that the moment I automated my savings, so I work in an organization that has a circle. So you can be able to tell them how much money you want to be deducted off your salary for your savings. And this money is deducted even before the money hits. So somehow you get so used about your monthly saving. The same thing you can also do with the bank. When I mentioned that I was able to save 200,000 like for 5 years continuously, I'll tell you honestly that no matter how much money I was earning, if that money was money that I was supposed to pick and take myself to the bank to bank every month, it is highly unlikely that I would actually make it for all that period. Because believe me, there are moments when I would feel like that 200,000 I'm actually putting into this, maybe I would be using it for something that is urgent that I need to really take care of. So I think automation does really wonders. And I like what Alex shares and says, lifestyle. Because every time we are earning more, what comes in your mind is, how can I improve my lifestyle? So you get to realize that because you've not been having, let's say, a car, or you've not been in a posh place, now you want to rent something that is maybe more than a double. So and again, there's that emotional feeling, or sometimes some people call it a spirit. There is that force that comes through when you have a lot of money with you. And for me, I always try to make sure that I'm not liquid, because when I'm so liquid means that every time I have a problem, I'll think about the money that I have, and I'll immediately feel like I need to spend. But if you make yourself like you're doing an automated saving, and this money is going directly to an account that you do not have control, that you cannot just withdraw. And these days we have unit trusts. Of course, unit trusts can take you 24 hours to get your money, but it's like there's that decision you have to take for that money to actually come out from a unit trust. So it's so better off than leaving that money on your bank account, because if it's on your bank account, these days we even have mobile banking. I've actually struggled to join mobile banking for one of the reasons, because I understand myself. Again, it comes down to how you disciplined, how you manage your expenses. So for me, I'm like, since I have mobile money, I can withdraw some money and put it on mobile money to help me with the day-to-day. But I don't want to have that direct contact with my bank account, that anytime I need money, I can get it. Of course, it's good for convenience. I have a credit card or a debit card, but I don't want to be in that position where I can easily access my money, because that's a problem. Because when somebody reaches out and maybe they need of a soft loan, the next thing you're going to think about is, have this money, get it. And before you know it, you've actually run out of your funds. And again, like I mentioned, the money that you have on your, let's say your account, unless you have other reasons, either it is you're putting on maybe a fixed deposit account, or you have an investment that you're going to make that is just waiting. I encourage that when you get that money, move it to an investment. Automate it to a unit trust, automate it to a life policy if you have one, automate it to something, or to just a saving group that you know that, okay, I'm saving this money, because sometimes you want to invest at a certain point in time. Maybe you do not just want to invest when you still have that small amount of money. You want it to accumulate. Most people opt for unit trust, because for unit trust, you know that my money is there. It's getting interest every day. But at the end of the day, when I need that money, I can actually get that money and put it into what I need to use. So instead of making this money accumulate from the account, because there's a risk that you can lose that money from the account, not from other people, but even from yourself, where you have financial needs. Because generally, I don't know again why this happens, but you get realized that every time we have money on the account, problems will just show up. I don't know where the science behind that, but something will just show up, and before you know it, things are turning the other way around. So it's quite important for you to see, what can I exactly do with my money? Give a direction to your money, budgeting. Now, there's something that, again, quite a lot of people share and say recording expenses. I want somebody here to share with us, if they are recording their expenses, how are they able to do it? This is something that I sometimes struggle with. There are those small expenses that sometimes you spend on, and before you know it, you can't remember what you spent on. I think it's quite easy for me to be able to record the major expenses, but the small expenses, like you've taken dinner here, you've bought water, you've bought data, some of those expenses I sometimes struggle with. And I think recording is one of those things that most people recommend. So do we have anyone who does recording? And how are you able to record those? Or what is your alternative? For me, I use an Excel to be able to record some of the expenses, but sometimes you're not every time with the Excel, so sometimes you may miss. But somehow, I think, nevertheless, you have some picture of where your money has gone. You see, for example, right now, it's 31st October. When you look at the past months, those are like 10 months of the year, and now multiply that 10 times the salary you've been earning, you'll see it to be a lot of money. That even you start asking yourself, but where does this money go? Like, I earn money every month, but then where does the money go? So you ask yourself, if you've not been recording, much likely you cannot even remember that you actually contributed to somebody's wedding, or you actually bought yourself a shirt, or you sent some money to your parent, or you actually invested somewhere. There are people who may even forget where they put their money. So it's important. I am one of those that before I started to take note, record, I'll find people who, like, maybe you'll give them money or you lend them money, and it's them that are actually telling, by the way, I have your money. Why? Because you've lost track. Maybe time has passed and somehow you've forgotten it. Somebody needs to remind you. So it's important for you to record a key of your outflows. Like I shared, sometimes it may not be possible for you to record each, but making sure that at least you record something that is helpful. Martin here shares, clearly, everyone who earns should have a lock-in automated saving option. Very few people can be so disciplined to voluntarily saving. I think that is something that I really agree with. There are very few people that are so disciplined that they're able to maintain that monthly saving. Like, that decision of picking that money, taking it to the bank and saving it is not something that is often comes very easy to a lot of people. So automate. And again, I'll give you an example. There's a circle I'm part of. So there's this individual who saves the money on a monthly basis. They save, But before even the month ends, they're actually coming for their money. They're coming for a withdrawal request. So again, to whatever account you're automating to, make sure that there's some level of difficulty in getting that money. Now, that doesn't mean that you do not need the money, and doesn't mean that you're making it so hard for yourself. You're just making it easy for you to be disciplined at the end of the day. So that is quite a lesson that we want to take on. Now, the other thing that also we think about, especially when it comes to conversations around money, is of course family and money. We have a lot of aspects of black tax, and this conversation of black tax is a hard one, because quite a lot of people are where they are because certain people had to forego whatever they could to make them get where they are. So when you now get to a certain level, you get obligated to also replicate the same. But the challenge comes in that sometimes, as you want to make to give a return to the people that helped lift you, you are not creating a system for yourself that can take care of you at a later stage. And I think I was listening to one of the personal finance coaches sharing and saying that because in this early age, we take care of our parents, which is very, very important for each one of us, because the parents sacrificed a lot for us. So it's very necessary to take care of these parents. But when you look at how the trends are happening, you get to appreciate that our children may not have the same capacity to take care of the elderly you. Why? Because, well, it was easy for people to get jobs previously. Now it's a bit different, that we have a high probability that the children will depend on their parents even in retirement. So as a parent who is now looking ahead, 20 years, 30 years ahead, you need to have a picture that there's possibility that the children that I'm giving birth to, they may not take care of me, but I'm the one supposed to take care of them. Now, that again changes the entire equation. And that does not mean that you do not plan to give back in terms of what people regard as black tax. But being able to responsibly plan and say, okay, if I'm earning this amount of money, I'm using let's say the key budgeting tool, which is very common, the 50, 30, 20 rule, where I know that at least within the 20%, I can give back to the people that really brought me up. But at least I have maybe 10% or 30% that I'm also putting aside to be able to create for the unforeseen future. There's a gentleman who posted, I think, and I also posted this, may have been on Twitter, where he said that the people that you've been taking care of, when it is that time when you do not have, they're going to ask you, but what have you been doing with your money? And they will forget about the fact that you've actually been taking care of them. The reason why you've not developed yourself is because you've actually been taking care of them. So it's very painful, but I would love to hear your thoughts about black tax. What do you think is the best way to handle it, especially in the desire to help and uplift others just because you're uplifted? How can you do this in a way that does not hurt you in the future? And hurting you in the future means does not affect your financial stability in the future because you have been, somebody used this term and said, you are Jesus to everyone. You're the savior. When somebody says, are you able to borrow me 100,000? You give. My child is sick. I need to take them to hospital. You give, which is very, very good again. My child is not able to pay school fees. You give them. So what do you think is the most responsible way of handling black tax in our L&H? I'd like to hear. So there's a comment here. Martinez says, at the beginning of the month, I list expected incomes and key expenses I intend to incur, including savings, and I update it as the money comes in. I'm able to tell if I already have a deficit that month. That way, I'm able to prioritize the expenditure items to fit my income and decide what should be postponed. This is brilliant, and I do this a lot, and it does really wonders. Previously, you just get that money and start spending. Before you know it, you even do not have money that can sustain you in the month. Imagine you've earned a salary and by mid-month, you do not have anything. Why? Because there's an expense that you should not have spent on at that point in time, an expense that could wait for the next period. But because you receive this amount of money and your brain somehow deceived you that I have this money, so I can pay for this expense. Before you know it, you do not even have transport to take you for work. So whatever Martin is doing is quite important. So I would like to hear about this thing of black tax. What are some of your thoughts? What do you think people can actually do when it comes to managing their money in relation to giving back? I would love to hear some of the thoughts in the comment section. Okay. Good to have Makande Stephen, who's joining through online on YouTube. Could you share your thoughts on that? If you're watching this via YouTube, I would like to hear about what is your strategy on the aspect of black tax. Do you think we should be giving this money? Do you think there's a way out? What do you think is possible? All right, all right. Okay. I'm looking for the comments. Please share in the chat box. And if you're watching this via YouTube, you can also share. Okay, okay. Keep the thoughts coming through such that we can be able to learn together. I want to say that as we get more of those comments, it's it's quite important to give, but I think you need to, for anything to do with money, you need to plan your giving. That's what I can say. The other thing that is also very important, and again, I also want to reflect us when it comes to family, is and again, I want to highlight this. I am married, so there's certain things that I've learned about finances as a married person and as a person who is employed as a corporate person, that I believe that when you become married or when you get married, the conversation of money goes beyond now you and now gets into your spouse, but also God blesses you with the children. The children also come into the picture. And the children do not even only come into the picture when they are born. The children also come through into the picture even before they are born. And why this is very important is because when all these people come into your life, there's there's that responsibility that comes with it. The responsibility is not just short term in terms of meeting the daily financial needs, but it's also longer term in terms of looking at aspects to do with if their children, their education, their medical care, you're even looking at their just shelter, like where they going to be kept. You're even looking at aspects to do with in case I maybe I retire, where can they get an alternative source of income, or what do I even want to leave for them when I am gone? You see, the aspect of generational wealth is not something that you talk about when you're actually aging, but quite a lot of people build systems that help them to ensure that they have some aspects of generational wealth. I'll give you an example. So my father, now late, intentionally introduced us to the businesses that he used to do. He made sure that we understood the work that he was doing, or the sources of income that were actually bringing money. There are times he would send you to go and pick a check from somewhere. There are times where he would send you to go and get money from a tenant. He tried his best to make sure that he teaches us aspects of how money comes in, but also, of course, how money is spent. And there's one thing that he told me. He told me, Samuel, every time you get a child, like you get a new child, make sure that you have at least a structure, an apartment that could bring in money that could take care of school fees for that child, either you're around or not around. Now, that was his way of doing things. These days, we get realized that we have life insurance policies, education policies. We have various investments that can take care of our children. You need to think through as an individual who is entering into a relationship or marriage. But also when you get down as a couple, it's also very important for you to be able to sit down and discuss some of these aspects to see how do we want to run the financial affairs of our lives as a couple, as a family. And being able to also even speak about those hard conversations of my money, we are going to have a joint account. This is what we are going to contribute onto the account. And this is, maybe we're going to have an account where we have both of us as signatories. This is what we want to leave for our children. Basically, these conversations are important because things are not just going to happen by the wind. Like, you're not just going to wake up tomorrow and you have an education policy for your children. Like, everything has to get down to plan and being able to picture ahead and have the hard conversations. When it comes to aspects of money, of course, it's a hard conversation in itself, but you need to see how can we have a conversation about this. And again, I want to hear your thoughts in the comment section. How do you think can couples have these conversations around money, these hard conversations? Because for quite a lot of people, I've talked to different people that have different ideologies of where they're like, my money as a woman is my money. As a man, my money is to take care of the entire family. I am one of those that when I was starting out in my career, I thought that, or even when I was getting married, I thought that me not telling my wife about my earnings was actually a good thing, because in that maybe she will not have to be afraid saying my man is not earning well. One thing that I learned is when you do not mention means that somebody is going to have an expectation gap. They're going to think, oh, this guy must be earning a lot of money. Maybe they are not giving me money because they are mean, but yet you have a loan that maybe you're paying for and that is taking up a huge part of your money. And before you also know it, you do not know what tomorrow would bring. This is a person you've brought into your house. They are depending on you, and your income is cut off, or if even your life is cut off. Basically, you no longer have life, but this person does not even know where to start from, because every morning you live, in Uganda, we have what we call Kameza. So you leave money for them. That's what they depend on you. So it means that even when you become sick or you get into a state where you cannot even speak or even control your gadgets that can help you access money, this person cannot do anything. So one of the things that I learned, again, you share your thoughts as well, is if you are married, honesty and transparency in terms of your currency, how much you're earning, does a great deal, because you're no longer just as an individual. Now you are a couple that needs to go together. Of course, there's challenges right there, and I would love to just hear your thoughts onto that aspect. I just want to read through a few comments here. Where Alex Saka says, prioritize financial stability, set boundaries with empathy. And I think here Saka specifically speaks around the aspect of black tax, being able to support others. And he says, acknowledge. He says, acknowledge and plan for it. This is very good, and thanks so much for sharing on that. Now, the other thing that I just want to read and see what else is there. There's another thought. Sharon says, the best way I have handled black tax as a firstborn daughter. Yeah, I'm also a firstborn son. So this gets interesting, is by setting clear financial boundaries while maintaining compassion and open communication with my family. I think that's very important. I think the aspect of open communication is important. And even as I mentioned about spousal relationships, if you do not communicate, because you see somebody will give you a call and say, are you able to help me with 100,000? You genuinely do not have money. But because somebody has called you on 31st and the expectation is by this time you must have received salary, in their mind, they will live with this mindset that you just do not want to give them. So I think open communication helps you in managing any aspects of such where people may think differently. You're able to tell them either you guys, I'm now doing school and it's taking a lot of my money, or I recently took a business loan and right now I'm paying for it. I'm not able to support now. One of the other things that I also do is offer them, you may not support them on 100,000, but you can give them, let's say, 50,000 and explain to them your situation, which is very good. So the open communication is a very key word, and I appreciate that you've shared that. Said I have a realistic budget that allocates a specific amount of 500 for family support, as I ensure that generosity does not compromise my personal financial goals. I think, again, that is very important. Remember what you said, the budgeting. Make sure that you have a percentage. For Sharon, she has a fixed amount. Another person might have a percentage. But of course, your income might vary. For most of us, our incomes is the same throughout. So having even an absolute amount even helps you in a better way for you to know that this is the amount of money that I support. Of course, there are cases where you'll exceed, but you're just making sure that your mind is curated in a way that you're not compromising on your financial journey as well. And where you can tell somebody, say, this month I'm not able to, but next month, if I'm able to get, maybe I can support you. That is also helpful at the end of the day. So thank you so much for sharing. As someone financially literate, I also educate and empower my family members about financial literacy, helping them build independence rather than dependence. That's something that I've also tried to do. Now, one of the things I would say, as a firstborn son in the family, one of the things that I strive for is to ensure that my siblings have level of financial knowledge. Every time we meet, conversations around them are to how to empower them. So I'm better off supporting somebody who wants maybe capital to start something than somebody who just wants money for spending. Because somebody who wants capital, you know that this person, once you give them money, they are now going to put up something that is going to help them financially in the future. So you no longer have to support them. So that is a very great strategy again. And then I'm not quick to send money as soon as somebody gets off the phone. I first breathe like for a day. That's very powerful as well. You see, some people say if you do not respond within a day, there's possibility that this person will find another solution. Again, there's a habit where people feel entitled in terms of your support. They feel like if they call you and you support them immediately, even the next time they will call you in the same way. It will be so surprising that the next day they have found a solution. So I think I like the breathing, being able to take a pause and breathe once in a while. I think is very helpful. And then ultimately managing a black tax effectively means balancing culture and family obligations with personal well-being. Yeah. So I think I like all these strategies, and I thank you so much, Sharon, for sharing. I think we learn so a lot when it comes to, because we are Africa, and Africa has its values, cultural norms. Yeah, basically we are created like that. So being able to balance through, I think, is a very, very, very important thing. I just saw Nasim right here joining our call. Nasim, good to have you on call. We've been here trying to have conversations. I have a very interactive audience here. Would love to hear about your money conversations as well, such that we can learn. Good to have you on call, Nasim.
Oh, thank you. Thank you, Samuel. Sorry I'm late, but I'm here.
It's okay. It's well, it's well. We are glad to have you here. So I just want to share. Nasim has a presentation, so I just want to share the presentation such that she can share with us what she has prepared for us, such that we can be able to yeah, to learn one or two things. Nasim, I'm glad to have you on this call. It's been a while since we said we will do it. But yeah, here we are. Thank the Almighty that we've been able to create a day like this. And we're now going to have the session. Very good. For those people who have not met Nasim before, I met Nasim on LinkedIn. And what was so much captivating about her content was the authenticity and yeah, the consistency as well. She shares so consistently. And Nasim, I really want to commend you for that consistency. There's a post that I think is that really, I think, got me not emotional, okay, emotional, some element. I think when you shared about your journey of becoming sick and getting through that whole cycle about emergency fund and all those aspects, and how you're able to come through and the lessons there, that was a very powerful story. And I look forward to even hearing some of your thoughts around it, such that our audience is able to get one or two things. So I'm just going to share my slides. Okay, sending hacks to all LinkedIn consistent people. Thank you so much, Sharon. Sharon, you also consistent. I think you're one of those that also post about personal finance, which is very good because learning from each other, I think, is something that is really very powerful. So once we have the opportunity to be able to learn from each other, yeah, I find it's very powerful. So, Nasim, are you able to see the slides on your side?
Yeah, sure. Yeah, I'm able to see them.
Okay, so Nasim, glad to have you here. Thank you so much once again. for joining through the call. I just want to ask my team to join me in welcoming Nasim to this call, and then we can get started. Let me just try to see. Okay, we have quite a lot of people here. Thanks so much for everyone for joining. So Nasim, you're most welcome. I think the floor is yours. You could tell us, I think there are people who are meeting you for the very first time. So it would be very good for them to know who is Nasim and what you do and what they should expect from a presentation.
Hi, everyone. I am glad that you stayed this time waiting for me. I'm Nasim Mubarak. I just love to call myself a banker. I'm a banker. And I just love to talk about finances in all aspects, not generalized into personal finance. I just talk about finances, whether it's for the economy, whether it's for you as an individual. I just like to make finance simpler, those interactions about finance easier to be held by anyone at any one point in time. And today I have been invited to talk about finances in the professional space and highlight about my ebook that was released this October on the 13th. So I'm really glad to be here and glad to be on this call.
All right, good to have you here, Nasim. Quite a lot of welcomes in the chat box from various people. They are excited to have you. So I think we can dive into our discussion on the slides.
So I think the presentation I created was just a full cover up of the book, but generally because you had invited me to talk about the book, so I thought why not talk about the financial weight of the professional spaces we occupy as professionals, because I believe most of the people on this call are professionals, and there is that weight that comes when we're in these professional spaces. Some of us have succumbed to it. Some of us have been lucky to be very cautious, and some of us never know where the weight is, but we are victims of it. So I called the presentation Financial Weight of the Professional Spaces We Occupy, an insight of the book. So the first quote in my book that I like is, your job isn't where you work, but where your money story begins. Because most times when we get that job, you're like, as long as I have the job, as long as I work, it is okay. But we never know that the jobs that we get are writing our money stories. It's where we start our stories when it comes to money. So even when we're in these jobs, we should know that we are writing a bit of our financial story somewhere, maybe in our bank accounts, in our emergency funds. But the fact that we do not put that in mind, we always think it's just a place where we go and work. Like, I'm a banker, when I go to the bank and do what I'm supposed to do, that is it. But I'm forgetting that the more I'm in this job, it is writing my money story. It's telling a lot of things about my money story. Am I spending to impress people because I'm a banker? Am I spending to fit the category of being a medical doctor? So all those things are caught up in that quote that your job isn't just where you work, it is where your money story begins. Because either you could be selling yourself short because you just want a job, because I want a job. So if they're paying me 200, 300K, it is okay because it's just a job. But then you're forgetting that if you're getting that money, you're writing your money story 3 years from now because you said it is just where you work. But that shouldn't be the case for most of us, I believe. Can we move to the next slide, please? So throughout the book or throughout this presentation, there is a hidden truth about the professional life that we have, because I have seen for myself, like you have said, about my story that captured your attention. is that you never know a lot about yourself or what you have until maybe you have an event that happens in your life and it resets you to zero. And it's either the money story you had or you have nothing. So I read about the hidden truth about professional life. Every paycheck carries both potential and pressure. Like today is the 31st. I believe most people have been paid between the 20th to date. And that paycheck that we have received will either carry potential or pressure depending on how we choose to utilize that paycheck. Because if I get the paycheck and I already have a budget in my head where my money is going to go, if I am saving, if I am investing, and I already have a plan for that money, then that paycheck carries potential. But if that paycheck I get today, or the paycheck I have gotten today doesn't have any plan to it creates pressure. It carries pressure because now I'm excited. The bankers have credited my account. Then the next thing I know, I'm all over that place. I'm thinking today is Friday, I should be out. Then I'm thinking I should send someone money. So there's a lot of pressure around that paycheck because you have not aligned it to a specific purpose. So that is one of the hidden truth. Like you have the paycheck, yes, you have the money, it has come, you have worked so hard for it, but then it's split in two ways. It's either a potential thing for you, it's something that causes pressure. There are some people that are always anticipating for payday. Like the month starts, like tomorrow shall start 1st November, and you're already anticipating for the payment of November. So that means you're always on pressure. Like there is pressure within you for that paycheck because you never plan for it. And the person who plans for it, it will carry potential for them because they are very much aware that as I have planned for this money, it takes me till the 31st or till the 30th of November, and I do not have to worry in between. So that is one of the things. The second one is we work for comfort and not for financial growth. Like I said, your job isn't just where you work, it's where your money story begins. So most of us will stay as long as I have the job. And that is okay because that is what society has made us accept. Like, as long as I have this job and it's giving me 300K, it is okay. At least I take something home. So sometimes we normalize that for a long time and we are not growing, or we are not looking for other ways to diversify that take home that we have. So we start working for comfort. You go, you get your 300K, you go home. The next month comes, you're not doing anything. You're just there for comfort, not for financial growth. So 3 years, 5 years from now, you're the same person without maybe an emergency fund, like you said. You're the same person without savings. You're the same person because you've been working for comfort, because you've been having the 300K. You have not planned for it because it's comfort money, so it does the bills. And when the bills are done, you're at zero. You do not have any other thing that covers you or covers your financial growth. So you are in that space. So if you're in that space and something terrible happens to you, as restructures, an accident or something, you're totally reset because you have been working for comfort and not for financial growth, because you chose comfort over anything. And that is a hidden truth that we have, because some of us have been there, but along the way you realize that your employer is just your employer. At the end of the day, they pay you for the work you have done. So if you've chosen to work for comfort, they'll pay you for the comfort that you're working for, or for the hard work that you think you put in. Then you'll stay where you are. So if you don't think about diversifying what you're taking in, then you're not going to have your financial growth grow. It change from where it is. Then we have the corporate environment normalizes spending to fit in instead of saving to grow out. That is very true. I think, Coach Samuel, you know that if you've been in corporate, you know that there are times where we have normalized spending to fit in. Like it's Friday, people are texting you, it is end of month, we need to catch up, which is not bad. You've worked the whole month, but if most of the times you're going to spend because everybody is saying, you know what, we have to be here, or this is what we are doing, we are going golfing, we are going doing this. So even you who knows what you take home and it is not diversified, you're going to always want to be in those circles, and you are spending to fit in. It's not even in your budget, or in case you don't have a budget, then you have pressure to actually fit in into those spaces. Or also in banking, no, like everyone wants to, you have a professional look that you must have. So if people are buying new suits, you're going to say, oh, I need to get a new suit. Everybody has bought a new suit. Oh, I need to buy shoes. I need to have my hair done every month. So at the end of the day, in corporate, you're spending to fit in. Maybe the people who are spending that much have a different paycheck from you. Or maybe their incomes have been diversified, or whatever their story is, you don't have to go with the flow. You don't have to spend to fit in, because that is what most people do in corporate instead of saving to grow out. So you find yourself in that hidden truth. You find yourself in that cult of corporate. So at the end of the day, you don't have savings and you have nothing to look at when you leave corporate. Coach Samuel, are we together?
Yes, we are following closely. We are together. Our friends, some comments, people are following in the chat box. I can see some people here indicating they are following.
So we have the one that I like the most. Most of us earn enough to maintain the image of success and not build freedom. That would fall into working for comfort, but most of us want to earn enough to maintain the image of success. So if I have a banking job and I can get a car and I can live somewhere average price or for middle class, I'll stay there because I'm like, oh, okay, if this paycheck can actually help me fuel my car month to month, pay my rent, so I can live within this paycheck. I can live within this paycheck. So at the end of the day, as long as your image of success is there, as long as I see Coach Samuel drives this car and he wears this suit to work, we believe he's successful because he has built a certain personality that when you look at him, he's successful. But when at the back of his mind, if he knew he doesn't have any financial freedom, maybe he doesn't have enough savings to take him for the next 3-4 years in case he didn't have a job, or it cannot even sustain him 6 months in case he didn't have a job. So most of us earn enough just to maintain the image of success. If I have 2-3 million and I know it can take me through the month and people say, oh, she's successful, we shall have to, you'll live within that, okay, we call it delusion. You'll be so delusional that you actually think you have financial freedom, but then you've just created an image of success that people look up to you and say, oh my God, you're so successful. You even have a car. We Ugandans do that because when somebody has a car, they're actually very successful. So you live into that fantasy that you may prolong for some time, and it may derail your future to financial freedom. It will derail you because you have internalized that image of success and you live within that truth that you have within yourself. And at the end of the day, you don't have anything for yourself because people have made you believe that you're successful because of the image that you wear. And what closes this slide is that we have high income. The result of these hidden truth or the lies that we live within is that we have high income earners with low financial well-being. Like we have very many people that have a lot of money or that earn quite some good money, but with low financial well-being, because I believe financial well-being is the whole you, your savings, your everything, how you feel when you look at yourself, the conversations you have around money, all that is your financial well-being, what you know about money, what are your triggers when you hear about money, all that is your financial well-being. But you're going to find that there are people who earn even as much as 5 million or 6 million, 20 million, and Their financial well-being is very low because they have portrayed an image of success. So there are people who hang out every Friday. So if they do not hang out, what will their colleagues say? What will the people in their circle say? So now they are there, and at the end of the day, their financial well-being is very low. As per metrics, maybe they don't have savings. If they got into a high-end problem, they don't have anything to run back to. But people know that they actually earn a lot of money. So you see, in life, when you have an issue about money and you've been the biggest spender, people will be like, oh, but you've been spending. Ah, he used to spend a lot. We thought he had money. That is when it hits you that actually you've been spending, but now you don't really have money to sustain you through something. And life alerts you very quickly, or it's there to remind you when you are messing up. I think that is it for this particular slide. I think you missed a slide. There's a slide before that, Coach Samuel. Yeah, there is this. Then this slide is about the weight we don't talk about. So there is this weight that we carry in the professional spaces that we don't really talk about. It's too heavy that we tend to not talk about it, or when we talk about it, some people do not want to comprehend it. And one of it is the lifestyle inflation. Lifestyle inflation is I would like to call it, let me say in simpler terms, it's when you get some money, when the money comes, everything about you changes. Like if you've been sleeping in a house of 300,000, when you get a promotion to in your salary, let's say by like 300,000, you move to a house of 600K. Because you feel like everything is changing for you. So also your lifestyle has to change. So lifestyle inflation, each promotion comes with invisible expectations. So there are people who are being promoted this year, let's say to managerial positions and somebody feels like I cannot be a manager in this place if I am not driving. What will my subordinates think? So at that point in time, they feel like, oh, if I am a manager in this place, I should drive a car. Even when they do not need that car per se, they'll go and buy the car because there is an expectation from them to have a car because now they are a manager. So such things make people not have sound financial decisions within themselves because of the invisible expectations. Or if somebody switches jobs, let's say they leave this bank to what they would call the top 5 banks, they feel like if I am working for this bank, people in this bank have a certain lifestyle that we consider out there. So if I have to fit into this space, maybe I have to wear this type of suits. I have to hang out in these circles. I have to be golfing. I have to be so. It is internalized, and for that, your lifestyle is going to change. So you're going to inflate your incomes, or your lifestyle inflates at that point because of the promotion you have, or because of that weight that is within the professional spaces. If you've been, for people who have had a chance to work in audit, know if you're working in KPMG or Deloitte, there's a certain, these invisible expectations people have about people in audit firms. They should look like this, they should drive this car. So such things, when somebody moved, let's say, from banking and they went to audit, or they would want to meet the expectations of that place. So it catches up with them, and you're carrying this weight. It's draining your finances, but because you want to fit in, you cannot talk about it. You don't even know how to talk about, or you don't even know how to articulate it because you don't see a problem with it, but it's a weight you're carrying within you, and it can affect your finances. Then you have the comparison pressure. Colleagues' lifestyles quietly dictate how we measure success. So in workplaces, yes, and everyone that knows that comparison is a thief of joy. So when we compare people's lifestyles, you're going to think it measures success, because if I'm working with Coach Samuel and I see this year he bought a new car or he upgraded his phone, I think iPhone 17 is out, and I'm going to think because he is doing this year, he is successful because he's able to change his phone, he's able to buy a new car this year. In my mind, I think he's successful. So I am going to also want to compare my life to them, but we could have different finances, we could have different financial, we could be in different financial stages. He could not be a parent and you are a parent. You have school fees, he doesn't have school fees, but you want to compare your lifestyle to his lifestyle. So you because you think that he lives in this particular place, you live in this particular place, that makes him successful because he has done something. So you keep comparing yourself, and at that you're either spending more to get to his level, but yet for him he doesn't have the same needs as yours. You could have a whole list, or you could be the only person that supports your family, and you're comparing yourself to someone whose family doesn't need their support at any one point in time. So it creates this weight that you'll carry, and you don't even know how to explain it to people, because how do you start telling people, you know what, this one drives a car and I also feel like I should drive a car. So, and you think because they drive that car they are very successful, and yet it's not true. And we have emotional spending. um when you like, this is more about as professionals, we spend emotionally. Since it's end of month, it has been stressing. I've left work past 7 p.m. So I mean, I only live once in this life, so I should go. It has been a long week. So it has been a long week. Yes, it's okay, you're allowed to spend on yourself. You do it week 1, you normalize it, you do it week 2. So because in life there'll always be hard days, and the hard days will not stop. So if you tend to normalize emotional spending, and you cannot come to control your emotions in a more subtle way, in a more analytical way, you're going to find yourself spending, because every time you have something that triggers you, let's say you buy a new phone, something triggers you, like they say shopping is therapy, you go and shop. At the end of the day, you are spending even what you could have saved, because you feel like your emotions can only be in good place if you spend. So if you're not able to regulate your emotions even in the workplace, you're losing out, because if somebody makes me angry now, also in customer facing jobs, if somebody makes me angry, if a client makes me angry, and the next thing I know, I've had a very hard day, the customer made me angry, I'm at CJ, I eat, that is Monday. Another customer comes on Thursday, they do the same thing that triggers me, I'm angry, I do the same thing. So at the end of the day, you are not regulating your emotions. Therapy is expensive, that's true, but even shopping therapy is expensive. So sometimes we need to come to a point whereby you regulate your emotions yourself. You're like, you know what? Okay, I'm angry, but food is not going to solve this. I am angry, but the other 3 bags I'm buying are not going to solve these emotions, because I'm going to wake up, I have the bags, and I am still angry if I do not maybe share about it or talk about it. So at the end of the day, you spend and you're still angry, because after you shopping, when you get back home with your bags of clothes and shoes, you sit and think about, you're like, actually, that person really pissed me off. So that means you're still angry, but you have shopped, and that money, you don't have it anymore. So salary dependency, like I said, paid day becomes the most anticipated day for planning, not relief. Not for planning, I mean, but for relief. Like today, you wait for the next paid day, not because you have planned for it, but because the moment you see that money, you're relieved. You're like, oh my God, salary has come. and you're at peace because you depend on that day so much because you do not plan for it. There are people who say, for you never worry about salary because you know when the salary comes, it is already allocated. 20% has gone to savings, this has gone to this. So you do not even anticipate because you know you have automated savings alerts that are going to go off by the end of the day. You have, let's say, direct debits and standing orders. Because you have planned for it, it doesn't even cross your mind. And because you have planned for the payday, everything comes in for you in plan. So you don't have to panic or you don't have to depend on that day a lot because you still have money to take you to payday. By the time payday comes, you are still living on some money from the other payday, or you have other sources of income that you don't have to worry or depend on the payday. Then lastly, here is financial pressure in professional spaces is not about lack of income, but structure. So most times the pressure that we have in financial spaces is not because we lack income, but because of the structure. Because the people who earn a lot of money, and because they have pressure, because it's not because they don't have that money, it's because the money doesn't have structure. Somebody earns the money and they don't see it by today is 31st. They don't see it by the 5th of November because they don't have structure for that money. Even when you ask them, you're like, they can't even tell themselves where the money went. Even when they sit down to do the math is not there. They cannot remember. And because that income lacks structure, you cannot, how would I say it? You cannot account for it. Like you fail to account for it because it lacks structure. When Coach Samuel calls you now and says, you know what, I have a problem, my car's broken down. You're like, your car's broken down. You send him 200K. Another person calls you, they need airtime, you send them. So the next thing, you don't have the money, but you don't lack the income. Like you have a source of income every month, but the fact that that income doesn't have structure, you cannot explain it. You don't even know, you don't even have a way to tell people, you know what, I don't have money, because they know you earn. But because you lack structure when it comes to your finances, you don't know where the money is. So you have the pressure. You have the financial pressure because it's because the money that you earn or your income doesn't have structure. Coach Samuel, are we okay up to this point?
Yes, we are very fine. I hope that people are following. Please feel free to share your thoughts in the chat box, in the comment sections as well. I think somebody has just posted here. Sharon says the formal culture has done more financial harm than good in the corporate world. Emotional regulation, well put. Yeah, great thoughts right there, Sharon. So good.
So we can move to the next slide. So in this slide, I talk about where we often go wrong in our finances or in the professional spaces. The first one is confusing job security with financial security. I think here is where I get to share my stories, Coach Samuel. So I think 2021, my body fails me, it relapses, I get an accident. I don't know how to call it a border accident or a car accident, no. As we all know, corporate is tiring, corporate, and it was end of year, as we are doing end of month, end of quarter, so we work late hours, we work early hours, so you're tired, you're frustrated. I think we're planning something. I think we're planning a team building. So after work, that day we try to quicken. So after work, we're like, you know what, we go shopping for this. We have to shop for this event. It's tomorrow, and tomorrow we also have to work. So we need to catch up very fast. And here I am. I think I relapsed because I had the last thing I remember is it's somebody trying to call me. And the next thing I know, people are surrounding me and they tell me, you know what, you can walk, you stand up, you can walk. And I'm telling them, you know what, I cannot walk. And they're like, no, you can actually walk. I'm like, no, I cannot walk. And I look down and I try to look at my leg. I cannot feel my leg. And the next thing I know, My leg is 3 times its size. So people are trying to help me. They carry me and they take me to hospital. They rush me to emergency. Obviously, emergency, they first run test, then they take you to the x-ray. Then they take me to the x-ray, they tell other people to go out. So when the results are out, they tell everyone to go away since they are not family, and they break it to me that, you know what? You have broken the longest bones in your body. And since it's about 7:30, you're unable to see a surgeon, but we are not quite sure if you will ever walk again. At that point, I don't even know what they're telling me, because you're telling me I cannot walk again, but I was walking 5 minutes ago. Like 5 minutes ago, I was walking. And they're like, you know what, you cannot walk again. We shall assign you a surgeon the next day, but we are going to manage you on IVs for the whole night until you're able to see the surgeon. So I am there with broken bones. So they just assemble them for you, take you to the surgery ward, because I was supposed to go in for surgery. So they take you and they leave me there. So here I am, see the surgeon. Obviously, surgeons and any other doctors, they know how to manage expectations. They tell you, you know what, you're still young, these bones will heal. So I think within 6 weeks, you'll be able to walk again. And obviously, since you're in pain, you know you're going to be able to walk again. And we also believe in God that you're going to walk again within 6. The 6 weeks became 4 months in a cast. And 4 months in a cast, yes. That means I was bedridden for 4 months. And I started walking again 2023. No, 2024 January without crutches. The other years I walked with crutches. So the reason why I share that story is I had the job, yes. But if I did not have financial security, because there's a point where your health insurance that you get from work stops. Like they're going to say, yes, we can cover accidents, but at this point, because if you have an accident, broken bones, insurance can cover surgery, to cover medication, but it will not cover supplements. It will not cover, there are quite other things that it will not cover as insurance, that some bits they don't cover. So those are the things whereby, you know, if the job was there, it was there, they were not taking it. But if I did not have the financial security, if I did not, I do not want to say I even had an emergency fund at that. I'd not labeled it, but I knew that I had an account in another bank, since I'm a banker, in another bank where I used to put money every month. I don't know why I used to put money there, but I used to put money there. So that is the money that had to cover each expense that insurance was not covering at that time, because they would say, you know what, the doctor would say, you see, these painkillers will help you to sleep through the night and you don't have pain, but now your insurance can only cover, let's say, tramadol. But if tramadol is not stopping the pain anymore because your body is used to tramadol, I can recommend this painkiller for you, but insurance does not cover it. So now you're there, you're frustrated. You have the job because the job security was there for some time. But if you don't have financial security, because you having the job does not mean you have financial security. You could have the job and you don't have the money. So it took me a lot of time, and it gave me this big thought of, if I didn't have this money, my employer was not going to pay for those things, and they were not paying for them. They were only paying for what insurance would cover. So at that point, the job was there. Even if I wasn't working, it was there. But I needed to have my own money to cover each medical expense that insurance was not covering, and transportation to hospital. Even when I resumed work, obviously because I was using crutches, I could not do the normal transportation means I had to use. So I had to have a private driver to drop me and pick me from work, because if I had stepped on a border or if I'd taken a taxi, I would relapse. So the job was there, the security of the job was there, but if I didn't have the financial security, if I didn't have that fund and say, let me liquidate this fund, to sort each expense I had, I would be more depressed, and the accident would have made me depressed. So most times we confuse that job, we confuse having that job with having financial security, because there's so many people that have jobs and don't have financial security. And the people that have lost jobs, and the only reason they're still surviving, or they're still in a slightly better mental space, is because they had financial security at the end of the day, or it's because they had a plan somewhere that has sustained them. So job security is not financial security. You can have the job and do not have the money, because every month you're using that money. Then we have our waiting for a higher income before practicing discipline. Now this one, the more money you have, the more problems. So if you think the more the money comes, the higher income that you'll have, you'll be able to practice discipline. This is a lie, because even when you earn the most, if you cannot plan for 100,000, if you cannot budget, if you cannot discipline when you have 100,000, how will you be when you get 100 million? It will be 10 times more. Because if you don't have that, if you think when you get 100 million, you'll be able to be more disciplined and allocate your finances, that is not there. Like if your brain cannot say, I have 500,000 and I have to be disciplined around this one, when you get more, 10 times more, 50 or something, you're still the same person. So discipline is more of you as a person than the money itself. So you have to build discipline with what you have now as you work towards more. But you cannot wait for more to start practicing discipline. Discipline is discipline. If you're disciplined, even when you have 100 million, you stay disciplined, because it is instilled within you. You have normalized it within you that, you know what, even with this amount of money, I have to say, even with this amount of money, there are things I'm not going to do. Then ignoring budgeting and expense tracking. I think this one I've highlighted. Every time we don't track our expenses, or every time we do not budget for what we have, we create a lot of financial pressure around ourselves, that we get into what I would like to call a financial confusion. Because if you cannot budget for 100,000, how will you budget for 100 million? It's quite hard to think. If you cannot track your few expenses right now, maybe as a one people person, how would you track expenses when you have kids? It will be so hard for you, because now you'll have school fees, you'll have kids' medical expenses. So the expenses are more. But if you start by tracking the few expenses that you have, in case you don't have kids, you don't have a family to take care of, it's much easier that when your expenses keep increasing, it's just a step ahead, because you have started and now you're just building on. Then I have treating investments as for later, foregoing investment because you think, okay, this year has not been a good year. I think we shall invest next year. You don't know what next year is. Next year is as uncertain as the other year that will come, or as the year you're in. So if you think there'll be a good year for you to invest, if you think this year is the best year for me to invest, or this year is not a good year, January didn't start so well, so I cannot invest. Because if you want to invest next year, you should start now. You should start building the rapport now with investments. By now, you should be asking people about what kind of investments you should take on. What is the best place you can invest in? What type of business can you look up to? So that by January, you have built a mindset. You've even put a budget for it. You're like, you know what? 10% of my salary, I'll be investing it, because you have internalized it in your brain. But you're not going to wake up mid-year and tell people, you know what, now I have 100 million. I want to invest it. What can I do? It could work for you, but it is also you have not taken time to plan ahead about that investment. So it is hard for you to actually to do that. So let's stop treating investments as for later, because these investments may be what comes handy when something goes wrong. Then mixing personal and business finances. So this is for people who are in business and yet working. So we tend to mix our finances. you are a profession, you have an income, you have a business. So because your salary is done, now you can start eating business money. Because you're like, you know what, let me first get money from the business account to buy fuel for this month. I will pay it back. You're mixing that money. You're not even being accountable for it. You're using money. Or the same account that receives salary is the same account that they put in money for business. So all the mixture is there. Let's learn how to separate my money from my business money. Those are two different, like a business and an individual are two different entities. You as an individual, you're an individual. A business is a person of its own. So if a business is a person of its own, let it have its own accounts, let it have its own budget. And you as a person, you should have your own budget. And that is how you can sustain a business and your personal finances, because now you're able to establish what is working and what is not working. But when you mix together and you're not being accountable, you'll never know. That is why most businesses don't last, because you do not know where the money went. You are at the shop, you've gone to check on something, you're telling them, give me 100K. I need to get something around. Yeah, you're using business money. At the end of the day, you're balancing things. Things are not balancing because you do not have separate lines in your finances. So this slide I ended by saying we climb the ladder but forget to climb. We climb the career ladder but forget to climb the wealth ladder. Like we are chasing. I want to be a manager. I want to be the senior manager. And you're trying to climb that ladder, but you're forgetting to climb the wealth ladder. When you climb the career ladder, you start having an image of success. This is what senior managers do. These are the senior managers driving this organization. These are the phones they hold. These are the clothes they wear. So you're trying to fit into that ladder. You're trying to grow that ladder, which is not bad, but then you're forgetting to also grow or to climb the wealth ladder. So you get into that mess that's you're there, you're confused, but people see you as successful. You're a senior manager in a certain place, in a certain bank, and people find you successful because of your title. But then at the end of the day, you know that some things are not working for you. So, Coach Samuel, are we able to move to the next slide? Okay. No, it's this. So, from all the slides I have shared, this slide is where we have our turning point. What do we do? And for me, and from what Coach Samuel has said, from most of the things that I share on LinkedIn, there is only one thing I'd like to talk about is awareness. If you are aware about something, then you're good to go. You don't need anything. If you have clarity about something, because awareness is where discipline starts. Because what you're not aware of, you shall not solve. So if you want to reduce the financial weight in your professional space, in your whatever space that you hold, the first step to do is awareness. Be aware of what is going on within your finances. When you are aware, and sometimes it's only you that can tell yourself that that honest conversation. If you cannot tell yourself that conversation, even if you came to me for a session and you yourself are not saying, you know what, I'm a bad spender, or I'm an emotional spender, if you're not self-aware of what is within you, then even if you paid Coach Samuel for a month and you yourself, you're not aware that, you know what, it is me, I'm the one with a problem, I'm the one with the money problem, then the person helping you, the advisor helping you, whoever is taking you along in this journey may not help you 100%. So the first thing, ask yourself, what does my profession teach me about money? Now, for me as a banker, I'd like to say banking is different. You can be a banker and money is not your thing, and you're a bad spender. That is very true. We have seen that with bankers, not to brag, but we're not the best financial people. And us being in money and doesn't 100% make us the best financial people. But you have to learn that what does this profession teach me about money? So that is the first question you ask yourself. Good. One thing I've seen now is that HR and companies are trying to incorporate financial sessions in their wellness sessions if they have a wellness part in the organization. But what you have to know what your profession does. Your profession detect an image of success? Let's say in banking, we are supposed to look a certain way, but then you can look a certain way at a particular budget. Not that every day you should look this particular way. You need to be self-aware that my profession as a doctor, this is what it teaches me about money. Like maybe I make this money, this is how I save it. Or maybe I've been a doctor and I've seen people struggle to pay medical bills. So as a doctor, I need to learn that there'll be a point in time where I need to save maybe for my kids to be able to access the best medical services, because you have seen how people struggle when they don't have money, and you can only work on them when they have paid consultation. So you see within the lines. Now, as in the banking space, you're able to see that actually somebody can struggle with money, or they can have all that money and you see them spill it away. And you're like, oh, this was a rich man, we should check up, but they failed. The next question is, am I growing financially alongside my career growth? Oh, this is very true. Your career may be growing, but you're not financially growing. The people who are in spaces where they just have a title, but that title doesn't come with any financial growth. They're either spending the money, or the title has been made so good to actually you feel like, okay, if I get that corner office, but then with that corner office there isn't so much to it financially, but you're just fighting for that corner office because of luxury, or because of how you feel, because of the image that is when you sit within that corner office. But then your finances are not growing alongside your career growth. You're growing, but your finances are the same. But first, when you look at you from outside, you're like, oh, the guy is a senior manager in this bank. He is maybe the head of audits, but financially you're not growing, but your career is growing. It's either you're given the money and you spend it to meet the image of success, or you're being lied to because of the title. You get the title, you don't get the money. And these are things I talk about in the book, Career Connection. I think that is the first chapter in the book, Career Connection and Money Connection. You have the job, it doesn't match your money, or you didn't negotiate your work. That is also another chapter in the book, where we need to negotiate what we feel we are worthy of, because we are giving them a service and that service has to be paid for. We are putting in the hours, so we need to get our hours worth. And then another question you can ask yourself is, do my spending patterns reflect my values or my surrounding? Now, if you're emotionally spending Monday to Monday or thrice a week, you have to analyze your spending patterns. And this is something you do you as you. Do they reflect your values? Let's say if you're Christian and you're overly spending on alcohol, and maybe on Sunday you don't, or even at work, you don't only just in church, you don't. So you have to look at it. Does it reflect my values if I spend this much, maybe on a particular thing? And maybe when it comes to spending on charity, I am not doing that. Does it reflect my values, or does it reflect my surrounding? So you have to analyze yourself and say, if I'm coming from such a family and this is how I spend, does it reflect where my values? You as a person, you have your own values. Maybe you have integrity, you have all these things that you believe in as a person, and maybe the way you spend does not reflect what you're telling us you believe in, what your values are. So I close this slide by saying awareness creates accountability, and accountability leads transformation. So if you are aware about what is going on, you're able to hold yourself accountable or somebody else is able to hold you accountable, because now we are all aware that I am a bad spender, or I'm an emotional spender, or this is what I do, or I do not know anything about money. Or when people start to talk about money, I'm triggered. I'm very triggered. I even feel like you're crossing boundaries. Why do we talk about finances in the workplace? This is something we're not supposed to talk about. So if you're not aware about anything, no one can hold you accountable. Even you cannot hold yourself accountable. And if you cannot hold yourself accountable, you cannot transform. Because only when you are accountable of the things in your life or in your financial space or in your professional space, you're able to transform. If you're aware that, okay, I've not been saving, this is where I've not been saving. So if you are aware and you're like, you know what, I'm going to be held accountable. Like this year, I created a group where we joined a few people, and they decided to hold these people in this group accountable for saving. So every month, people have to show me proof of savings, and I have to remind them. So I hold them accountable, and it's 10 months now, and people have saved consistently for 10 months because I hold them accountable. Now, today is the 31st, and I'm going to start asking them why I don't have screenshots for your savings for the month of October. And I put in the WhatsApp group, Port Samuel saved for October. Well, Nasim saved for. Then you're going to be there, and your name last showed in September or August. And you're going to start thinking, or you're going to come and give me reasons, this month was bad. I'm like, okay, let's see next month. So because I'm holding them accountable, they have successfully saved for 10 months because they were aware that saving was the issue. And they're like, you know what? I need someone to hold me accountable to save this year. And 10 months in, they have successfully saved. So awareness creates accountability, and accountability leads to transformation. So next month, they'll be able to, maybe next year, they'll have something to do with their savings or whichever gain. Then this slide is about the ebook, why the ebook is there. So this ebook about money conversations, or my book about money conversations, just came from a thought of, or from a space where when I first joined the workplace, people were quite happy for me, by the way, because I started working at 21. People were quite happy for me. They're really happy I got the job. My parents were so excited that I had the job. And for some reason, they'll be like, oh, you have a job. Now, since you have a job, you should start planning. And whatever plans they had in mind for me did not include money. They didn't even tell me, you know what, now since you have the job, because, you present them with your contract. And they're like, oh, you got the job. And that is where it ended. Like, no one actually had the time to say, you know what, since you have this job, this is what you should do. Because I speak about my parents because they have been in these spaces. They've been professionals, they have worked. So I would expect them to tell me, you know what, as a young person, obviously I had to get an account, but as a young person, this is what you should do with your money. This is how you should start. No, they told me, you know what, since you have the job, you can buy yourself nice things. So no one was telling me what to do with the money. So the money would come just because within me, I fear being broke. I fear being broke is what saved me. I fear not having money. Actually, it creates anxiety within me. If I don't have money, I'm very anxious. I don't know what my next life would be if I don't have money. So just because I have money anxiety is the reason as to why I got myself disciplined. Because if you get a job when you're young, your worries would be shoes, change hair, take friends out. But because I didn't have these conversations, and I had to take myself through and say, you know what, since you've gotten this job, you need to have an account elsewhere. You need to do this. And I have seen it with other people as they join the workplaces. Even when you join the job, you'll have induction, and the induction is about the company policies and procedures, what to do and and a few things about how to handle yourself within the work environment. But no one talks about money. No one tells you, know what, you've gotten this job, this is your salary, this is what you're going to do. No. So just you read your contract, you'll sign for the money. The payday comes, they give you money. So you either have the pressure or you have potential. So I felt like before we join these spaces, people should be kind enough to have these conversations with us, because we can either choose to listen to them or not listen, but they have had the conversations with us. They have told us that, you know what, yes, you're going to work hard, but this is what will happen. Even when you work hard, even a person who has not worked hard, you're all going to get the same money, but you need to regulate your finances. You need to put your finances in order. So that is why I wrote this book, to just talk about how we can, how our careers are connected with our money, how we can negotiate our money. Or some of us signed contracts and we're being paid less, but just because the job was there, we felt like, you know what, let me take the job. So along the way, you sell yourself short because no one has had these conversations with you, or you stay longer because you feel like job security is better than financial security, or you do not diversify your income because, I mean, you're working for comfort. As long as you have a job, you can pay your little rent, you can maneuver, and the month ends and you're still surviving your life, you move to the next month. So that is why I wrote this book, for people who work hard and still feel financially stagnant, people who earn well but don't see growth, people who want to invest but don't know where to begin. So just the ebook, and what I put in mind is that most of us don't want to read. So the book doesn't require you to read a lot. It's just, as I said, it's an ebook. It has a scroller mindset. Like, you can scroll through and pick a thing or two. You're not going to get bored because it's on point. Like, the message is out there. You read through and internalize the reflection prompts for building financial discipline. At the end of each chapter, you find something that you can journal. I love journaling. So the points where the questions that you ask yourself, or there are quotes that you can reflect on within you and your finances. Coach Samuel, how far are we?
Yeah, I think we're on this slide. I think this is this second last.
No. I think you skipped one.
Okay, right here.
Yeah, sure. So I added some lessons here that we must embrace. One of it is it's also a quote in the book. Your job is not your financial plan, but your financial tool. Most of the times we think our job is our financial plan. Because you have the job, you think you've planned for your finances. But our job is a tool. Like, I have to use my job as a tool to grow my income. Let's say I'm a banker, and along the way, I have learned so many things about money from the conversations I've had with customers, from any engagement I have with anyone, with colleagues in the bank, with colleagues outside the bank. So if I am able to table all those thoughts and write a book, that job of mine is not my plan, but it has become a tool for me to diversify my income, to diversify my finances. So from it, I have learned very many things. And also from it, I have gotten money that I've used for other things. And that same job is a tool. The knowledge that you learn along the way, you are able to use. So you should not limit your job to being your financial plan. Like, when the money comes, you feel like you have sorted everything. It should be a tool that you use, something that you use over and over again, not something that you think is going to sort all your problems. Then financial literacy is as important as professional skills. Like, most of the people tell us in HR, in other walks of life, you need to diversify your skills. You need to have practical skills. You need to have this. But financial literacy is one of the best key skills. Like, even if I went and diversified, got a master's, got a PhD. If my financial literacy is lacking, those are things I'm going to have. But if I don't have that skill, then even all these things I have collected along the way are just an image of success. Like I have a master's, I even add it on my name, I'm MBA this. But then if that MBA is going to be so heavy for me if my finances cannot support it, because people expect you that when you have this MBA, you're wiser than a person who doesn't have an MBA. And then if you're wiser than that person, you believe you're earning more because they tell you, you know, you need to go and study this for you to earn more. Yes, now you're earning more, but you don't have anything to show for it because your financial literacy is lacking. So as we get these professional skills along the way, we need to embrace financial literacy as a skill that we need and that can be learned. Like you can change your mindset and adopt some things and be financially literate. Somebody may not have gone to school, but they're taken through. I see people going through circles, talking to farmers, and they're instilling these skills in them. They may not have the professional skills, but they may be more financially literate than you who is in the professional MBA this, and you're not as financially literate as they are. Because for them, you're going to find maybe a border guy and he's in a savings group and he saves every month. And there is me in a bank, I'm a banker, I have my MBA, but I don't have savings. I don't even want to hear somebody saying this month we are saving. So because we are two different people, these professional skills that we keep upgrading every year, we should also try to embrace financial literacy as a skill that we need. It's as important as the other skills that we are looking out for. Then every income level deserves a financial system. So whether you feel like you're at the lowest point of income, whether you feel like you're a low income earner, you deserve a financial system. As a person who is the highest income earner, you all need a financial system. You need a structure for your money, whether you're earning 100,000, 200,000, or whether this is what your business generates, you will need to account for it. You cannot say, me, I'll not have a book of accounts, I'll not do this in my business, I'll not balance my business because my business is a small business. It's a small business. And when you put that in your mind that you are a small business owner, at the end of the day, you're going to think everything is small. So you're going to even consider the revenue that you get as small. So you spend it recklessly because in your mind, you're like, I'm a small business owner. But when you start accounting for that small business, when you start putting the much effort in that business, it will grow. So every income level deserves a financial system. You as a small business owner, you deserve a separate account for your business. You deserve to do these small things for your business. Financially, you create a system that grows with time as the income grows. Then number 4, you don't need more money. You just need clarity. Like I said, most times the only thing that is separating us is awareness or having clarity. Even when you make the most money and you don't have clarity, nothing is making sense. So the more you're clear about what is going on within you and your surrounding in regards to finances, you're able to make informed financial decisions. So sometimes it's not the more money, because if you are earning 500,000 and now you're earning 1.5, if you cannot account for 500,000, it will be hard for you to account for 1.5. And you say, but now I earn more, and I still don't have savings. There's something lacking because you don't have the clarity along the way. Then you tend to lose out. Then number 5 is financial discipline protects your career dreams. So if you're financially disciplined, you're able to protect your career dreams, because you could have issues along the way, but if you have financial discipline, you could be able to support these dreams. Then this slide is I end it with: the future belongs to professions who manage both money and the meaning of it. If you learn to manage money and the meaning of money, you're able to you're able to, the future belongs to you. I need to wrap up. Then the reflection prompts. You need to ask yourself, am I earning or evolving? Do I understand the financial story my profession is writing? These are questions that you can reflect on. What's one financial habit that I need to fix before my next promotion? Next year is up here. Most people are going to get promoted to better roles, or they're moving to different companies. So you need to know what financial habit that you need to fix now before you get that promotion, so you don't get derailed. Then I think we can move to the next slide, since we need to wrap up. Then one of the solutions I have here is that you can start your journey towards financial awareness and discipline with my new ebook. And I think I'll share the link for those that would like to look at it. It helps you learn how to align your professional life with your financial goals, and also transform how you see, spend, and save money. It's available on Seller, very affordable at only 25,000 Ugandan shillings. Then I have the last slide, where I just have a closing message. Just put in a message. Your financial well-being begins the moment you start taking your career seriously, not just for the work you do, but for the wealth you build from it. So this is just a message for you to take home, that your financial well-being will begin the moment you start taking your career seriously, not for just the work you do, but for the wealth you build from it. So with that message, I believe we can all change how we have conversations around money. I beg to submit.
All right. Thank you so much, Nasim, for the insights. Ladies and gentlemen, join me in thanking Nasim for the insights. It's been a great conversation, reflecting, and I like the fact that you share practical things that relate to each one of us, especially those that are in the corporate space. I could see the comments coming through here from Martin saying a very insightful presentation. Philip saying very, very interesting. Brenda saying a wonderful presentation. Same with Nivelle. Quite a lot of people here are really, really appreciative of what you've shared. And I just want to say thank you so much for creating time for this sharing, and for the continuous sharing as well. Those that maybe it's your first time meeting Nasim, I recommend that you follow her on LinkedIn. She shares a lot about this message. She has also shared with us her ebook. I've shared a link in the chat box. When you click on that link, it takes you to Seller, where you can be able to make your payment. So this book, according to Seller, is just $8. Let me see in Uganda shillings what this would be. This is just 25,000 shillings, which I believe is affordable, because at the end of the day, this is about your money. And remember, you're creating an investment. Remember, she shared and told us that awareness is very key when it comes to a journey of money. So making sure that you continuously make yourself aware of some of the things, I think that's very important. Myself, I've read the book, and I want to commend the book, that it has insights which you'll find relevant for yourself as a professional. And it's also an easy to read. It's you're able to, like she mentioned, you're able to scroll through and pick some of the ideas. So feel free to reach out to her in case you have any question, or in case you want to follow her through LinkedIn. I believe that she can also maybe share her number, just in case you have challenges in terms of accessing the book online. you can be able to reach out to her, and then she can be able to give you ideas on how to go about it. Other than that, I want to say thank you so much, Nasim. We want to take a question. If you have a question, you could put up your hand, 1 or 2 questions, such that we can finish in the next 4 or 5 minutes. Okay, she has shared her contact right there. Feel free to reach out to her. Have a question, up your hand. I can 1 or 2 people to just, or in case you have your you want to paste that in the chat box, that is also fine. Otherwise, good to have each one of you here, and we really appreciate. Thank you so much, Derek, Brenda, and more others, Philip, and others that have shared about your takeaways. I've shared Nasim's LinkedIn account in the chat box. You can get it. So I think Nasim,
Yeah.
I think you have shared greatly, and people I think have been able to appreciate. So this session has been recorded, so you can catch the recording on YouTube just in case you joined us a bit late. Feel free to also share this with another person you think that will benefit from this conversation. And of course, feel free to reach out to Nasim when you need it. Nasim, I would just want to appreciate you once again for joining us today and for the great conversation. Could you just, I know you've shared your number in the chat box, people can be able to access it. Could you just share 1 or 2 things in terms of your closing remarks such that we can end the session?
Thank you everyone for being on this call. I'm really glad that you stayed around to listen in and picked something, 1 or 2 things. And one thing I'd like to say, like I said in the closing remark, the way we take our career life seriously is that we should take the wealth that we build from these jobs. Because as we work, we should know that we are working for ourselves and not for the job. So we should take our finances as seriously as we take the job. Thank you.
All right, thank you so much, Nasim, for those remarks. And I believe that we've learned 1 or 2 things there. The financial journey is one that you keep learning and you keep getting yourself involved in terms of whatever you need to learn at that point in time. It's not a journey that you can say, I know it all. So
Yeah, sure.
I think we'll continuously have these conversations. I know this is the right time, especially at this time when the year is ending. Yeah, no matter what has not really gone well, you've had her, she has a group where she tries to do accountability for some people. You can be able to reach out in case that's the support that you need. Yeah, and you see that you can create a better 2026 for you. Otherwise, for me and the team at Transformation Professionals Club, I want to say thank you so much to whoever's joined in. We just have a small announcement. We have this upcoming mentorship for public speaking that is happening starting of 5th of November. And it only goes for 300,000 for members and 450 for non-members. And today we had a special offer for those that have joined this call and maybe are interested in this, especially for either you're a member or not a member. We're giving a 10% discount. So feel free to reach out and just say financial conversation if you want to be part of this, and you'll be granted into the program. Otherwise, we want to say thank you to those that have paid and subscribed to the program. And we look forward to sharing some of these things such that you can be equipped in the area of public speaking. But also, of course, this definitely fits down into even your financial journey as well, because once you develop some of these skills, they're equally very important in increasing your value, and that definitely replicates even in your income. So we look forward to this. I think Nasim just shared something to do with most of the times when we're employed, we only think of salary, yet we need to be able to think of more incomes that could expand. So we thought public speaking would be an opportunity for you to leverage on to be able to push some, either your products as a business owner, or even help you to grow within your career such that you can attract a better pay. So if this is something that you've always wanted to be part of, we welcome you to this mentorship, and let's see how we can be able to grow together. Otherwise, good to have each one of you here. And this is your first time to join some of our sessions. We always have sessions every Friday, and we share on various messages on personal finance, public speaking, personal branding, personal development, among others. We will have a community. We have a WhatsApp group. Right now, we have about over 600 people on that WhatsApp group of professionals that have intention about their career, about their businesses, about their entire professional life and life even after professional life. So if this is for you, you want to connect, you want to be able to learn, grow, and earn, feel free to reach out, or we'll be able to add you to the WhatsApp group. Otherwise, thank you so much, and may God bless you. Have the best in the rest of the week, and enjoy the weekend, those that are going into a weekend. Bye-bye.